Today we're going to be talking about investment properties and second homes and how Fannie and Freddie's new rule has, I believe, unintended consequences that we need to talk about and we need to highlight now before the situation gets out of hand. So last year we had the adverse market fee where all of a sudden they added 0.5 point to all refinances. Nightmare, right? They basically made it so if you wanted to refinance your house, you were paying a premium. Lenders were taken aback. Everyone was outraged. Not great. They've retracted that. As of August 1st, that goes back. Now, on second homes and investments, earlier this year, they switched the way that they buy loans. Yes. So it used to be if we were selling loans to Fannie or Freddie, we could say, hey, here's all the loans we've got. We've got some owner occupied, we've got some investment, we've got some second home. You know, can you please buy these? Thank you. We've met all your guidelines. Great. Okay. What's happened now is that for every 100 loans a lender sells to them, only 7 total combined second home investments. 7. Yeah, not 7 second home and 7 investments, 7 total. So for every 100 loans, we're doing 93 owner occupied and 7 second home and investments. Now, when I first heard about this rule, I was like, oh, that's very interesting. You know, they're definitely, that's something that feels like it's going to be good for first-time home buyers because it's going to push out a lot of the second home and investors, right? Yeah, about that. Okay, so first of all, what's happened? So what we're seeing is we're seeing some lenders tighten up a little bit in guidelines on investment, 100%. Some lenders aren't doing investment loans at any level right now. They're referring it to other lenders because of the way that pie is divided, it's too much risk. And then beyond that, like what I see from my end is sometimes when I quote investment rates, they're great. And sometimes they're atrocious. They're horrible. I tell all of my investors and second home people right now, have a second lender on backup because my rates are going to be determined by how much room I have in the pie. And if we're sitting on a ton of investment in second homes, we are not going to be making that pricing attractive because ultimately what we do as a lender is we sell these loans to Fannie and Freddie. So we've got to make sure that we're baking the pies the way that they want. Okay, so here's the thing. Institutional investors, which I talked about recently, they don't borrow money from people like me. They don't borrow Fannie Mae and Freddie Mac money, right? And that is really one of the biggest threats to first-time homebuyers right now. It's not Bob who's buying his first investment property. It's the megacorps that have dollar bills on hand, okay? All this rule has done is it has made buying an investment property or buying a second home potentially unattainable for a middle-class American. Yeah, and that's the thing. So like a lot of times, and I think there's this misbelief where people think that if you can afford to buy an investment property, you're super rich. That's not true. There's a lot of people, and I've had many clients over the years who are very financially conservative. They scrap, they save, they do everything so that they get a big enough down payment for that investment property so that they can start living the American dream, which is to have properties that pay you, right? I mean, we've all seen the ads of get 10 houses, have great cash flow, all that fun stuff about how to build wealth in America. And if you do some research and you look at how wealth traditionally has been built in America, it is through property, right? We all know there's always someone in town. Oh yeah, John, his grandparents bought up this county, you know, 100 years ago. That's why they're so rich, right? That is where people build wealth, especially middle-class Americans, people trying to get into the middle class trying to go a step above. You know who doesn't get affected by this type of stuff? The 1%. If I quote an interest rate that's 0.5% higher to someone who's incredibly rich, they don't care. They don't care. The people who care are the people who are striving, right? And so once again, it's our middle class. It's our middle class, guys. Like, here's the thing. I'm all for first-time home buyers having a benefit. I am. I think that real estate in America is definitely an issue of the haves and the haves not. However, I don't think that something like this makes sense unless we also look at the bigger picture. If we're gonna put a fee on any regular person trying to buy an investment or a second home, well then how do we make sure there's fees passed on at a level that would dissuade mega corporations and the 1%? Right? Because otherwise all we're doing is we're crunching the middle again. So do you disagree with me? Am I crazy? Is this really helping first-time home buyers? Or, is this something they might take back? I really hope it is, because I have seen so many people who aren't the 1% build wealth through real estate, and it makes me really sad that they're having to do that at a much higher premium now. So thoughts, feelings, as always, feel free to reach out to me with questions. I am licensed in 46 states, and I am happy to help you out with a mortgage. If you're looking for a second home or investment, call me and someone else because of that pricing I was just talking about. Thanks for watching.